In today's video, I will show you a super profitable Heiken Ashi trading strategy for beginners that will make you a living. This strategy is very simple to use and it includes 2 free TradingView indicators. And to prove how well this strategy performs in different market conditions, I will backtest it 100 times with an initial account size set at $1,000 with 2-to-1 risk-reward ratio. But before we start, make sure you pay attention to everything I'm about to show you in this video so that you fully understand the strategy. Okay, without wasting any time, let's jump straight into it. So we're currently looking at the price of BTC USDT on a 15-minute chart, and before we add our indicators, let's first switch the candlesticks from Japanese to Heiken Ashi. Okay, now let's add our indicators. For the first indicator, let's search for EMA and pick this one right here. And for the second indicator, let's add Stochastic RSI. Now we need to adjust the length for this moving average. So let's change it from 9 to 200. Also, let's make it a bit thicker. The second step will be to make some adjustments to the Stochastic RSI. So in the style section, let's first remove the background and the middle band. Also, let's change the bands from dashed to a regular line. Okay, the strategy is ready. Now let's understand the trading rules. Alright, so here are the rules for entering a long trade. First, the price action has to be closed above the 200 EMA. This is a confirmation that we are officially in an uptrend. Second, the Stochastic RSI has to get into the oversold area. This means that at least one of its lines has to drop below the 20 level. Third, we're waiting for a bullish cross on a stochastic where the blue line crosses above the orange line. And now, very important rule to understand. The candlestick we had this cross on has to be bullish, and its body has to be bigger than the body of the previous bullish Heiken Ashi candlestick. If the previous candlestick is bearish, we do not wait for the next candlestick, we simply skip the signal. And only when we have these conditions met, we can safely enter a long position. As we all know, the Heiken Ashi candle averages the price, so our entry will be different from the closing price. If you want to learn more about Heiken Ashi, please watch this video right here first. Our stop loss will be set at the low of the most recent bearish Heiken Ashi candlestick, and we're going to be targeting 2 times the risk. For short positions, the rules are exactly opposite. First, the price action has to be closed below the 200 EMA. Second, the stochastic has to get into the overbought area. This means that at least one of its lines has to cross above the 80 level. Third, we need to have a bearish cross on a stochastic where the orange line crosses above the blue line. And the last condition will be to have the current candlestick we had the signal on bearish, and its body has to be bigger than the body of the previous Heiken Ashi bearish candlestick. If the previous candlestick is bullish, we simply ignore this signal. Our stop loss will be set at the high of the most recent bullish Heiken Ashi candlestick, and we're going to be targeting 2 times the risk. Okay, let me give you some more important examples so you have a better understanding of how to trade with this strategy. So here we see we've got the price action closed above the 200 EMA. The stochastic got into this oversold area. We also had a cross, but we see the conditions weren't met. Then, a few candlesticks later, we had another bullish cross. So the question is, would you consider this as a new bullish signal? And the answer is no, you wouldn't, because every cross that happens after the first cross, while the stochastic is being oversold, is not considered as a new bullish signal. The same is true for short trades. For example, we see the price is being in a downtrend, the stochastic RSI got into the overbought area. We had the first bearish cross, but we see the conditions weren't met. We see the previous candlestick was bullish. So in this case, we ignore this signal. A few candlesticks later, we see we have a new cross. And this signal is not valid because the stochastic didn't get out the overbought area any time between these 2 signals. Here's an example where you would have taken a short trade. We see the price action is closed below the 200 exponential moving average. The stochastic issued a new bearish cross, and all our conditions are met. You can certainly use a different money management strategy where you would have let your winners ride. In that case, you will have to close the trade manually. The exit rules can be different, but the most common rule would be to close a winning trade as soon as you have a bullish Heiken Ashi candlestick with no lower wick. This is for closing a short position. And we see sometimes the risk reward can get up to 10 to 1. Here's also an example where you would have skipped a long trade. So first of all, we see the prices in an uptrend, the stochastic got into the oversold area, and we had a cross right on his candlestick. Even though this trade could have turned out to be a winner, we wouldn't have taken it, because the body of the current bullish Heiken Ashi candlestick is smaller than the body of the previous candlestick. Also take a look at these amazing bullish trades we could have taken with this strategy. We see the goal is to identify the times when the price is making a retraction and simply enter the trade once we have a confirmation of a continuation trend. Okay traders, I hope you have understood the rules for this strategy, so now let's do our backtesting and see how well it performs in different market conditions. Alright, the backtesting is finished and here are the results. The win rate for this strategy is 70% and we increased our account size by 749.41%, which is absolutely insane guys. By the way, I found those 100 setups within 5 months and 1 week. I found around 70 trades on a BTC USDT, but because TradingView wouldn't allow me to go further back in time, I had to find the rest 30 setups on the price of Ethereum. The profit factor for the strategy is 4.67 and we had 9 consecutive wins against 3 consecutive losses. So yeah guys, this strategy is absolutely insane and you should definitely go ahead and backtest it and forward test it on different markets and different time frames as well. Okay traders, I hope you enjoyed this video. Smash the like button if you did, as it really helps with the channel. By the way, Trade IQ is now translated in Spanish, so please subscribe to this channel if you want to watch my videos in your native language.